I'm Matt Bouchard with REIT.com here in New York City for REITWeek 2014. Joining me for this CEO Spotlight is Don Wood, President and CEO of Federal Realty Investment Trust. Don, thanks for joining us again.
Thanks, Matt, for having me.
Now, FFO per share hit an all-time high for the company in the first quarter, that's an impressive feat when you look at a company with the track record that Federal has. What drove those results, and do you expect it to continue?
Yeah, we certainly do, Matt. You know, our company is based on great locations with lots of people, money to spend, and most importantly, barriers to entry. And when you come out of the recessionary period of 2008, 9, 10, we're firing on all cylinders. There's no question about that. Actually, as you take a look at where we are, that's strong leasing, that's strong results from our development. There's an acquisition impact or two from the prior years, but that it's just the beginning of where we see ourselves going. What we are trying to do is to effectively double our earnings over the next 10 years. So a compound annual growth rate of about 7%, a little better than 7% a year over the next 10 years. And we can do that with things that we already have under our control, both in the form of the great core portfolio we have, some development opportunities that are starting to deliver, and the occasional acquisition that are important to our business plan.
So picking up on that development activity you talked about, can you tell us about some of those projects that are in the various stages, and if there's any new projects we should keep our eye out?
Yeah, well, I'll tell you, I sure can. The one thing about Federal is that we've only got about 85 properties, and in total, that's to me a real it's a real benefit of the company, because it means we look at each individual project. Real estate is a local business, and we don't look at it as a giant portfolio. So each thing is separately looked at. We have properties that we've owned for a long time that are ripe for redevelopment. Accordingly, Pike and Rose, which is our new mixed-use development, big one, in Rockville, Maryland, is delivering its first phase now, beginning in this month effectively. $250 million being put to work at about an 8% yield with retail, residential, theater, and some entertainment concepts. That's only the first phase. For the next 10 years, you'll see incremental phases there. Similarly, and if you go up to Boston, Massachusetts, just outside, we're also delivering on the first phase about $200 million worth of Assembly Row. Assembly Row is a very cool, I think, one-of-a-kind concept with outlet type of retail, with restaurant, with residential, with an entertainment component, Legoland, and also a theater there. That also is just the first phase of a long window of development. Partners Healthcare has recently committed to put 5,000 employees in a new consolidated facility adjacent to us there. So the long-term perspective is just, and opportunities are as good as they've ever been at our company.
And lastly, as the company's portfolio continues to evolve, consumer habits continue to change, how much more focus do you place now on marketing your properties than you did?
Well, I'm not sure there's more focus on marketing. The one thing that this company has always been about, and will, and maybe it is, even double down on that focus. It wasn't long ago when you went to a shopping center because you had to. We don't have to anymore. And when you think of consumer habits and where they're going, you have to go to a shopping center because you want to. And making it a place that is about living, about working, about entertaining, about eating, about being part of your life is more and more critical. And certainly that message needs to get out, but the way it really gets out is by creating the right product. Marketing's a key piece of it. I'm not sure it's any more than it ever was. Creating the right place is more important than it ever was.
Don, thank you so much.
Matt, thanks for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.